Finance committee met last week and we were presented last year's audit. Mr. Stout is here and he's going to go to give us a brief overview of last year's audit.
Mr. Stone?
Take the opportunity to come and go over the audit. This is for the year ending June 30, 2011. There's a lot of information here, and we're going to do this somewhat briefly for the sake of time. But if you look at the second page in the binder, it shows the table of contents, and we'll just run down and show you what all is in here. The first couple of pages is the auditor's report. The next section, which is pages 3 through 8, is what's called the management discussion and analysis, and that's the authority's discussion of the financial condition of the authority. It is done in comparative style compared from June 30, 2010 to June 30, 2011. Page 9 and 10 is what's called the government-wide statements. These are full accrual. It's intended to put a governmental entity basically on the same basis as a commercial entity. The next section, page 11 through 14, is what's called the fund financial statements. This is the traditional manner that government is reported. It's on the what's called the modified accrual basis of accounting. Then the notes to the financial statements, page 15 through 28. The budget compared to the actual numbers are on page 29. And then the last two pages is the auditor's report on internal controls and compliance with laws and regulations. If you look at page 1 and 2, this is the auditor's opinion. It's an unqualified opinion, which means that we believe that the financial statements that follow accurately portray the financial position and results of operations for the year. We'll move next to page 9. This is on the full accrual method of accounting. At the top, you can see the assets, cash $992,000, uncollected property taxes $316, capital assets less depreciation $6.4 million for total assets of $7.7 million, and that compared to the prior year of $7.5 million. Liabilities are detailed there for you. I won't read each one individually, but the total is $357,000. The number last year was $363,000. And net assets, sometimes called equity, $7.4 million. The prior year was $7.2 million. If you'll go to page 10, is the statement of activities, sometimes called an income statement. We had expenses of $4.1 million. We had charges for services of $434,000. And then property taxes levied for Parks and Rec and other revenues totaling $3.8 million. And that gives a net of $195,000 revenues over expenses. That compared to $128,000 the prior year. I'm going to skip on through the fund financial statements because there's not a lot of difference between those and what we just looked at. And go to page 23. I'll just hit some of the footnotes. Page 23 notes that on capital assets you invested $120,000 in additional capital assets, and you recorded $302,000 in depreciation on capital assets for the year.